What is going on, guys? It is Wednesday. We are halfway through the week. I don't know about you guys, but this week is flying by. That being said, I hope that you have been making moves, putting things into action that's going to help your growth and development, whether that's for your financial freedom, whether that's for your relationships with your friends and your families. All that matters is that you're putting one step ahead of the other and making moves towards hitting your goals. And I know that if you are watching this channel, you are someone that does not want to settle for average. You are someone who has much bigger visions, much bigger goals for their lives than what their current situation looks like. And that is what I love and respect about you guys. You are determined to make a change. Now, as you guys know, we're halfway through the week. I know a lot of you would have made moves out there in the market. So do let me know down in the comment section what you traded, whether you won, whether you lost, and what your thoughts and opinions were. Drop them down for me below. That being said, let me give you guys an update on what has been going down on my side over the last couple of days, because it's been a very eventful week. Okay, so check it out. On Monday, I sent a trade out to the guys over at the Patreon. This was a put option trade on ticker symbol ARKK. It's ARK, one of my favorite instruments to trade. I'm always trading this one. By Tuesday, that trade was up over 40%, netting a multiple four-figure profit. It's as simple as that. Now, if you missed this trade, don't worry. There will be another one. As a matter of fact, the next one is going to be going out today at some point, so you can get in on that. Before I forget, I've had a lot of questions over the last couple of days also about how to go about trading options, particularly if you're in the UK. Now, things have changed over the last couple of years. It's not how it was 4 or 5 years ago, where it was a lot more difficult to actually trade options. Now it's very, very easy, regardless of what your geographical setting is looking like. We have Robinhood, you have Webull. These are very beginner-centric, beginner-focused platforms that you can go ahead, sign up within minutes, and you can be on your way trading options. Okay, so Robinhood and Webull, those are the easiest platforms to get up and running with options trading. Looking ahead, let's check this out, guys. Check this out. The majority of the media and the sentiment out there in the markets right now is on the bearish side of things. So we've got an article here. Stocks are primed to tumble into a bear market as bullish investors have driven equities to 1929 extremes, famed fund manager says. The narrative is basically the same across the board. The majority of the market is bearish. The majority of the market is expecting some sort of drop, some sort of significant crash. That is what you're seeing across the board. The crazy thing is, though, we are in and remain in a massive bull run. We remain exceptionally strong with the markets. And this is because we have controlled inflation. We have corporate earnings, which are coming in good. We also have massive catalysts ahead of us, like the Fed reducing those interest rates, which will increase stock prices. Okay, so the bull run is driven by several different factors, and these are creating headwinds for the market. The thing that doesn't make sense is the majority of the media or the sentiment out there is bearish. When it comes to making money in the markets via options, the easiest way to do that is to trade with the trend. If you're trading with the trend, you have a much better opportunity, puts you in a much better position to make money. And this is because when markets rise, they can rise way more than you expect, and when they can fall way more than you expect. So this thing of fighting the trend is wild. I don't want you guys to be trying to fight the trend in the markets like what the rest are doing. As a matter of fact, check this out. You've got IG here. This is a big broker. they release their clients and what side of the trade that they're on, or what their sentiment is, and you can see that 71% of their client accounts are short the S&P 500. 71% of their clients are trying to fight the trend. 71% of their clients are going to get burnt. Again, this is something that I don't want you guys to do. I want to put you guys in a position where you are aligned on the correct side so you can make money. You don't want to be short the market when we are showing strength in a bull market. It won't work. Okay, it will not work. You want to make sure that you're on the opposite side, the long side or the cool side when it comes to options trading, and you can enjoy that momentum. That is what you want to stick to. Fighting the trend is absolutely wild. And you can see that the majority are out there trying to fight the trend. It's like trying to squeeze blood out of a stone, because even if the market was to pull back, guess what? It's only going to pull back a small bit and then shoot back up. So you might as well get in on that ride to the upside. Okay. So that is what is going on right now. But because we have so many people who are on the short side, it gives us a massive opportunity to be on the other side of the trade and make significant amounts of money. Okay, so check this out. Let's look at the market real quick. This is the S&P 500, and you can see the momentum. Okay, the momentum is clear. This is why you don't want to be fighting the trend. And we're now going for a second pass at that high. By that I mean we are making a second attempt to break through to that all-time high territory, which it will do. Okay, which it will do. So instead of trying to get in on, let's say, a short position like the rest of the market is, what you want to do is you want to actually wait for an ideal opportunity to get in on a long trade, on a call trade, and that is coming up very, very soon. As a matter of fact, if we are to see the market drop in the region of about 1.5%, which would take your SPY down to about 506, 507, that is as good a time as ever to enter into call positions for the market to go much higher and make that second pass attempt at breaking through that all-time high barrier. Okay, that's how you want to play the markets in the coming days, in the coming weeks. Don't want you guys to be part of this 71% that's on the wrong side of the trade, the wrong information and the wrong approach to the market. All right, ride that trend, baby, because that's what you want to do. That is what is going to put you in position to make money and make it very, very easy for yourself in these markets. Okay, guys? So I have a member from the Patreon said Sankey entered into a call option on Palantir before their earnings announcement yesterday because I've been hearing good things about AI and the company. However, the stock dropped hard after they released their earnings. Any advice on how to play options on earnings in the future? This is something that I see it's very common with beginners who are moving into options trading. What they will do is they will enter into an option before the company releases their earnings, and these earnings come around 4 times a year. So they'll pick a stock, in this case it was Palantir, unfortunately, and they'll jump in right before that earnings announcement. Then fate will be decided when that earnings is released, because yes, if there is a positive reaction, a significant positive reaction to the earnings, then yes, that option will be up 100%, 200%, could be even more than that. But there are many different things you want to think about and consider here, because that's just one scenario. The other scenario is the company delivers those good earnings, but the guidance falls short. That could cause the stock price to come down. There are conference calls that happen after the earnings, If the CFO says something that the market doesn't like, again, that can cause the market to drop, even though earnings was good. There's also the possibility that on open, the stock could move in the direction that you have anticipated and then reverse during the day, wiping all of your profits away. Or even good earnings, good guidance could come out, the stock could only move 1%, and you need more than that. You need more volatility with these earnings plays than 1% or 2% to actually make some money. It just shows you there's too many different variables here at play with options, with earnings trades by options. There's too many different variables happening. So it's not a good move. Okay, this is something that traps beginners. They do this, unfortunately, then they lose some money, and then they probably walk away from the market or stop trading options, which is a shame because options remain an exceptionally lucrative opportunity for everybody to make significant amounts of money. Options trading isn't just limited for the people in the suits or people with sophisticated information. The everyday person can now benefit from options trading and benefit in this in a massive way. You no longer have to wait for your employer to give you a pay rise so you can enjoy some more money, right? The options market makes thousandaires, millionaires every single day. The opportunity is most definitely there for you, but it just requires the correct approach to it. And earnings trades is definitely not the correct approach. So how to approach earnings trade? You just don't approach it at all. You should see earnings trading as like a minefield. You might miss the mine, but then in your next footstep, you're probably going to hit it or one after that. I have this philosophy that if you can't repeat something and do it over and over and over again with success, there is no point in doing it at all. So with earnings trade, even if you have success once, you are guaranteed to try to repeat that event in probably the next earnings, probably the day after, or very soon after that. And the likelihood is you just reverse course, you don't win that trade, and then it's downhill from there. But with that trade that I shared with you guys at the beginning of this video on ARKK, this is a setup that I've probably traded 150 times in my lifetime and will trade many, many times moving forward, right? This is a setup that I see all the time, one that delivers consistent results, and it's very easy to spot it and take advantage of it. So that's a very different approach to options trading, where you're going for something that's repeatable event because you've seen it happen over and over and over again over the years, versus an earnings trade which has so many different variables that is not in your control. And then there's that asymmetric information thing going on where, yes, you might think you know the performance of the company, they might be good, but then you don't have full clarity and full information that you actually need to go ahead and execute a smart trade. Okay, so that is my take on this one. Don't want you guys trading earnings. You don't need to. There's much, much simpler and easier ways that you can approach options trading and make significant amounts of money in a more systematic way, in a more repeatable way, in a way that's going to give you way more peace of mind as well, a way that's way smarter. So guys, that's the video for today. Make sure you drop me down some comments below, and I catch you guys on the next video.